It's Thursday, May 4th, 2023. A lot to talk about today. I want to get right into it. Markets across the board down, and Wall Street is very lucky that these markets didn't outright collapse today, crash today on some of the numbers that we're getting in regards to some of these regional banks that are in very, very big trouble. Dow Jones closed down 286, NASDAQ down 58, and again, it should have been much, much worse. It's almost shocking that these markets were not down, or at least the Dow Jones was not down 1,000 points today. But of course, we know that this is a rigged game. It's very manipulated. PacWest was $40 a share last year. Today, it is a penny stock. It was selling around $2.75. And it's going to get much, much worse here. First Horizon down 33% today. $10.06 a share. Western Alliance down 38% today, closed at $18.20 a share. Zions Bank down 12% today, closes at $19.93 a share. January 2nd of this year, it was over $48 a share. And we saw PacWest down around 52% today. Gold today, up around $21, $2,058 for an ounce of gold. Silver was up 66 cents, closing at around $26.35. I don't know where all those people went who said gold was going to $800 an ounce and silver was going to be $8 an ounce, and that's when they were going to jump in and buy. They were very, very wrong. And for people who've been watching this show for 4 or 5 years, if you were buying gold and silver back then, you have done very, very well today. And this is, to me, just the beginning. And I'm probably going to look back myself a couple years from now and regret that I didn't buy a lot more gold and silver. But I'm going to continue to be a buyer even at these prices, because I think this stuff is on sale and has a long way to go. And one thing that tells me that is the banks, the condition of these banks, what's going to be happening with the dollar and the competition coming to the dollar. But right now, a lot of banks are in trouble. Hundreds of banks are probably in trouble right now. And you have a lot of banks with very, very bad balance sheets. Their assets on those balance sheets are sitting at 2021 values, not 2023 values. And these assets from 2021 are worth a lot less today in 2023, and meaning that those balance sheets are worth a lot less, and those numbers on those balance sheets are going to be a lot different than what they thought they were worth back in 2021. This is now 2023. Those assets are worth a lot less. Take a look at what's happening in commercial real estate. And so these banks are in much, much deeper trouble than most people care to admit, because those assets that they purchased in 2021 are not worth 2021 prices. And we're going to have a rude awakening here very, very soon for a lot of banks. Gallup, about half in the U.S. worry about their money safety in banks. This was an interesting article. How worried are Americans? Well, according to this survey, 19% are very worried, 29% are moderately worried, 30% not too worried, and 20% not worried at all. Comment down below. Are you worried? Are you worried about your money in the bank? Do you even have money in the bank right now, or do you just have enough to pay the bills? Are you worried? Are you concerned? Or just this is nothing to you? I would love, please be honest. I mean, if you're not worried at all, great, let us know. If you are, let us know. I'd like to just do a little survey myself on what you believe, how worried you might be with having money in the bank right now. So it'd be a good barometer check. Fox Business, jobless claims come in higher than expected ahead of April jobs report. 243,000 Americans filed first-time jobless claims last week. We're going to see more and more people filing claims. And I think that these numbers are very manipulated also. But I think we're going to come to a point where we begin to see 300,000+ people a week filing jobless claims. But remember, this doesn't include independent contractors, people who work for themselves. They don't get counted here, or people who have just come out of college and can't find a job, or people who've left a well-paying job and had to take on a part-time job. they don't count. So how bad is it really? There's a lot of people out there losing jobs right now. We keep hearing about all these jobs available that, you know, there's 1.9 jobs for every American out there right now not working, but we know where those jobs are. We know that they're part-time, leisure and hospitality jobs for the most part. No benefits, no ladder of opportunity. That's where we're at. And so if you have a good job right now, ladies and gentlemen, do everything you can to keep that job. CNBC, 66% of renters say home ownership is hopeless. How in the world do we have such a propped up real estate market when 66% of renters say home ownership is hopeless, when we have 60 to 70% of people in this country working paycheck to paycheck, when household debt is at a record high? How in the world do we have this so-called real estate boom going on? Here's the reasons that renters are not going to be owning a home. 78% said they flat out can't afford one. 72% said they can't afford the down payment. And 71% said that the interest rates or the mortgage rates are too high. So this is not a positive sign for the future of real estate here in America. When you have a majority of workers now working part-time jobs, where half the people working in this country now are working a second job, 70% of this country working paycheck to paycheck. When you have, 45% of this country doesn't even have $400 saved up. How in the world do we even have a real estate market that's even functioning at this point? I think things are much worse than we're being told. That's my opinion. Let me know what your opinion is. Shopify cuts 20% of its workforce, shares surge on earnings beat. Economy is very strong. How are you going to have a strong economy when nobody's working? So you're going to continue to cut workforces so that you can raise the earnings. And so, yeah, the shareholders are doing well, but what happens when you continue to cut this many jobs? Thousands of jobs every day being lost. Great for the shareholders, but how long until it isn't? Because at some point, when nobody has a job, nobody's going to be able to buy products from these companies. Nobody's going to be able to use services from these companies. And sooner or later, when you have millions upon millions of people out of work, how does corporate America stay alive when nobody can shop at their stores, when nobody can use their products, when nobody can use their services because nobody has a job? We are losing a lot of jobs. We do not have a strong economy whatsoever. Here's another one. Struggling Lordstown Motors expects to end production of its EV pickup in the near future. More than likely, Lordstown is going bankrupt. And what is really happening to the EV market? We're seeing more and more of a lot of these vehicles being canceled. And we know that just the last I saw, 12% of people would buy an EV right now. I think the whole thing has been very, very overrated. And when you look at the cost of this, when you look at just the business itself, when you look at EVs and you look at batteries and you look at cobalt and lithium and all these metals that go into making batteries and where they're being mined. And mining is a very, very dirty business, but you see, 9, 10, 12-year-old kids working in these mines, these cobalt mines, all so that people here can have batteries to drive cars. So how clean is it really when you're mining all over the world, you're using kids for labor, and then we're going to be dependent on China for lithium? It doesn't really make any sense to me. I think it's a very, very dirty business. And I think a lot of people are beginning to realize that it just doesn't make sense for them. So we'll see how it plays out. Apple reports better than expected quarter driven by iPhone sales. So tomorrow, I'm sure this will resurrect the markets because everybody's going out buying iPhones. So we'll see what happens tomorrow. But I guess everybody has, $1,000+ for an iPhone. But as I said, markets tomorrow should be up based on the good news that people are out buying, $1,200 and $1,500 iPhones with money they probably don't even have. But we'll see what tomorrow plays out. But does this really mean that the economy is good because people are buying $1,200 and $1,500 iPhones with buy now, pay later plans or credit cards, and they're buying these phones that were made in China, not here? So, I mean, this is great news for Apple, but overall sales fell for the second quarter in a row. So it's really not that great of news, but the markets will try to make it out to be the best news it can find. And here's another one that I thought was really interesting today. Ferrari profits jump 24% as demand pushes waiting list into 2025. So if you want to buy a Ferrari, you're going to be waiting until 2025. You're going to be on a waiting list, and you're going to probably pay a huge premium to get one. Now, does this mean the economy's booming? No, we're looking at people struggling. 15,000 repos a day in America. People are losing their cars left and right. And you look at the average new car payment, I think it's about $713 right now. Insurance cost is rising, maintenance is rising, gasoline is still not cheap. I'm paying about $4.50, $4.60 for regular out here. That's about as cheap as I could find it. And I do believe this summer we're going to see a huge rise in the cost of gasoline. But we still have people out there making money. But I bet a lot of these people are probably in the banking industry. People working in regional banks possibly who sold their stocks before their banks are about to go under, and they're buying Ferraris, they're ordering Ferraris. How many people on the inside have already cashed out of the stock market, cashed out of banking, because they already see the writing on the wall? They already know from inside information what's happening and what's coming. So they're laughing all the way to the Ferrari dealership. JP Morgan and Jamie Dimon, they're laughing all the way to the bank. They're making out like bandits. So you have people in some of these banks doing very, very well, and the banking takeovers that we're going to see with some of these larger banks that are going to take over some of these smaller banks, they're laughing all the way to the Ferrari dealership. And so while the average American may be hiding from the repo man right now, or the average American is freaking out in the middle of the night because they're worried that their car is going to be taken by the repo man, not people on Wall Street, not people in the big banks. They're doing quite well, and they're laughing all the way to the Ferrari dealership, the Lambo dealership, the McLaren dealership, and all the way to their banks. They're making out like bandits. But hey, they're passing on all this to you with 29% interest rates on your credit cards. So while the average person is sweating at night how they're going to make the minimum payment on their credit card, the good news is people are out there buying Ferraris and taking advantage of these situations, and they're paying a lot of money for this. Peloton shares plunge after companies reports wider than expected loss. What a surprise. People just don't have the free money now to go out and buy stuff like this. Peloton made so much money over the health crisis because of all the stimmy money, all the unemployment checks and bonuses, and now also with low rates, now interest rates have gone up, and these companies are in big trouble because they cannot borrow money for next to nothing. The average American doesn't have a stimulus check or an extra $600 a week with their unemployment checks to buy stuff like this. This economy is doing a 180 right now, and the reality is things are going to get very, very bad, ladies and gentlemen. As I come to you on this kind of cloudy Thursday afternoon, but a beautiful afternoon, things are continuing to get really, really bad out there. And anybody that thinks that there are not issues in the banking system, you need to put down the Kool-Aid. And the more that you hear that, don't worry, the banks are safe, they're sound, they're resilient, the consumer's strong, you need to start worrying very, very quickly. They are trying right now to put out some big fires, and these fires are about to get out of control. So I think that we're going to continue to see contagion in the banking industry. I think the stock market is going to see some very, very serious trouble coming here very, very soon. They're having a more and more difficult time to prop up the stock market. The Fed now is running out of tricks, ladies and gentlemen. I mean, basically all they can do at this point, and they're not going to do it, they're not going to reverse course. They're not going to lower interest rates, at least not this year. If they do, gold is going to go absolutely psychotic. Gold will go psychotic crazy. So to me, it's like I've said, put some cash away, put some gold and silver away. If they're able to strengthen the dollar, and rescue these markets for a while, great, you have some cash. If they begin to lose control and the dollar begins to weaken, you have gold and silver, which is going to just go up. So I think you have to be on both ends of this for right now. Gold and silver are going to outlast the US dollar, that's for sure. But right now, the way I see things, this is a war of attrition. You must be very, very defensive right now. Don't take big risk right now. Get the debts paid off. This is not financial advice, but this is just me. What I've been doing over the years is just paying off all debt. I have absolutely no debt. I've been stockpiling cash, gold, silver, and of course, all the essentials and security, number one. But these are the things I think that everybody should be doing right now. But there are people out there that are going to continue playing the casino here, and they are going to be the losers. Watching some of the analysts today and some of the hosts on these financial channels today doing as much cheerleading as they can to sucker you into these markets. The real estate agents still are saying this is a great time to buy a house. I mean, what an idiotic thing to say. This is a great time to buy a house. You've got mortgage rates at 6.5%, and you have overpriced homes out there. It is not normal for homes to be going up 30, 40% a year. Now we have more normalized rates, but we have absolute abnormal prices. So it's a bad combination. We need to see prices come down. They will, and sooner or later, people who are not forced to sell are going to be forced to sell. We're going to come to a time in this economy where people are going to be forced to sell a lot of things. They're going to be forced to sell their vacation homes, cars, boats, RVs, and even their primary residence because somebody's going to lose a job, they're losing capital, they have an emergency, they're broke, and they're going to have fire sales. People are going to be forced to fire sale some of the things that they own. And right now, people aren't at that point yet. People, for the most part, aren't at a point where they have to fire sale something. But the longer we go into this collapsing economy, the more and more we're going to begin to see fire sales. And we're going to, I believe, going to see an avalanche of fire sales in this economy because people are going to go broke. What happens when somebody has a small business and they're losing that business? They're going to sell the house to try and save the business. Again, somebody gets divorced, somebody loses a job in the family, now it's a single income, they can't afford the house, fire sale. Somebody might own 2 or 3 homes, 4 homes, rental properties. The rental business, especially here in California, people are getting out of the rental business. They're going to be selling those investment properties and getting out. If somebody owns a few homes and they need to raise some capital because maybe the Airbnbs aren't doing as well, or the VRBOs aren't doing as well, or a renter moved out or whatever, they're going to have to raise capital. They're going to sell property. So there's a lot of different situations that can play out here, but I do believe that we're going to see a lot of fire sales coming in the next 12 to 18 months. So again, patience is a virtue. I'm exercising patience right now. I cannot be in the state of California 18 months from now, I can tell you that. But, you know, for people out there who don't have to move tomorrow, I would be very, very patient. I would be getting my credit in check. I would be saving as much capital as possible so I could put a very large down payment or pay cash for a home. I would get all my debts paid off. There's a lot you can be doing right now while you're being patient. So you might be in the market right now, but you don't want to buy in this market because it's overpriced. Well, get your credit score higher, put more capital away, buy a little bit more gold, pay down any debts that you have. And, you know, at that point, you'll have enough money to buy a house and maybe a little bit of money left over to invest in some other deals that are coming along and some other sales. We're going to see sales, huge fire sales in the stock market. That's coming too. Commercial real estate, it's already starting. You're seeing massive fire sales in commercial real estate. And so we're going to see the same in housing and in the stock market and in the auto market. It's all coming. We've seen this movie before, ladies and gentlemen, except part 2 is going to be a lot bigger. A lot bigger than part 1, that's for sure. So I'm going to leave it there today. I just wanted to check in with everybody. But again, I'm shocked but not shocked that the markets were just not destroyed today. with the news that we're getting. I mean, we're talking multiple banks right now in big trouble, and the Dow Jones is down only 286 points. Really? I mean, seriously? It's almost funny, but it's not funny because it's so fake and so rigged to watch what is happening. Think about this. We are looking at banks with billions of dollars of assets that are collapsing right now, that are trading as a penny stock, and the Dow Jones is only down 286 points. Give me a break. Give me a break. Be careful, ladies and gentlemen, because most people out there have no idea how bad it really is. You're not being told how bad it is. No, you turn on the TV and you're watching cheerleaders telling you how good it is, or how good it's going to be tomorrow, or how things are going to improve, and that it's not going to be that bad. It's going to be a minor recession now. It's going to be a soft landing. It's going to be anything but a crash. I believe now we have started into a major depression that is going to only get deeper and worse. And by the time they tell you and I that we're in a recession, we'll be in a depression. And I believe that we're already in a depression. But when people on the television cannot even admit that we're in a recession right now, how can you believe anything that comes out of their mouth? When Jerome Powell comes out yesterday and tells you that the banking system is safe and resilient, how can you believe anything he's saying? Again, just like these people on television, we have analysts, we have economists, we have investors all coming on telling us that we're not in a recession yet. How can, once somebody says that, I cannot believe one word out of their mouth, because we are deep in a recession. We are now in the beginning of a depression, and it's only going to get worse, and you need to prepare. This isn't the end of the world. This isn't to freak you out or scare you. This is to prepare you, because fire sales are coming, tough times are coming, and you need to be prepared for that. And you need to take advantage of all this so that you set yourself up for a victory, that you set yourself up for success. God bless every one of you. Have a great day. I look forward to speaking with all of you very, very soon.